Welcome to the Loan Officer Breakfast Club. Once again, everybody, it's a pleasure to be here with all of you. Looking forward to today. It's kind of a big day going on. We got a great guest with us. Barry Habib is in the house, my friend. It's going to be pretty good. But we don't want to sidestep Kristen Simpson by any means. Of course, we've got Kristen in the house as well. We've got Carl in the house. We've got Steve Kyles in the house. We got everybody in the house. It's going to be a fantastic day. Let's get this show underway, my friends. Welcome to Loan Officer Breakfast Club, brought to you by the Mortgage Marketing Animals. We're going to have a great day. Thanks for showing up, everybody. Glad to have you here. Hey, if you're here for the first time, we'll just remind you that we are here every Monday through Thursday at 8:30 a.m. to 9 a.m. Eastern time. Of course, absolutely free. We do revolve around the Mortgage Marketing Animals Daily Success Plan. So you're going to get a lot of great information every single day and help fill that pipeline and move that needle forward. That's what it's all about. But today, a little special day. We got Barry Habib in the house. I want to get here. And so without further ado, we're just going to get going, man.
It's time for a Mortgage Marketing Animals.
Straight in. Let's go.
Yeah, baby. Here we go. That's right. Today's guest. That's right. Today's guest. We want to get going pretty quick this morning because we don't have a lot of time. Barry's got a lot to share. His eyes are riveted to the screen right now. He's looking for a number, and this is going to be a big number. Barry, you're muted. Can't hear you. So unmute real quick. There you go. What's going on, Barry? What are you looking at?
I'm looking at
maybe we don't want to know, but
no,
if we can tell us, tell us.
This is what we're waiting for. We're waiting for the CPI numbers to come out, and they came out very favorable. Before, what did I tell you? I thought the core CPI and the headline CPI was, I told you 3% beforehand year over year.
Yeah.
We got 3% year over year. So
nice. There you go. There's a cheer. You hit that one. How about the core?
Green room. Come on. I'm looking for the year over year, but I think it came in pretty much what we thought. I told you guys before the call 4.9 to 5% core. Let's see what comes in. I'm waiting for the number right now, but I think it's going to be a good day for the bond market. I think
that's good. It's always good to see green in the bond market. I tell you, on the MBS highway, I love it when I go there every day. It's like, is it green? Is it green? Just be green, right? So anyway, hey guys, Barry Habib in the house. Barry, thanks for being here on the Loan Officer Breakfast Club. It's a real pleasure to have you. I know you're still checking out that number, and you're going to let us know what's going on with that.
We're good. We can roll because I've got so much. So you tell me when you're ready, and I've got so much that I'm excited to share.
We're ready. Let's go. What do you got for us, man? You had some thoughts. Right, we kind of teed this up, and you're ready to roll. Go for it.
Yeah, I got the number, by the way, 4.8% year over year. I thought we were going to be at 4.9, 4.8, so much better than expectations. This has to be good news for the bond market. This is starting to see what we were expecting to see. We're a little early. Listen, let's face it. I thought the rates would start coming down over the summertime. I thought it would start the very beginning of it would be in May. We didn't get that because we had the banking crisis. We had the situation with the debt ceiling. So that kind of got postponed. But here we are, not too bad, month and a half later. And we are starting to see, I think, the beginning right now. So I think we're going to be good on rates. This is just the beginning. So some good news. Anyway, thanks for having me here. You guys do such a good job. There's great things I hear about what you put out for people every single day to get them going. So I know we got a limited amount of time. I'm going to jump right in. I want to tell you that this is a time where I don't blame you if you have some anxiety, if you have some concerns, if you have some fears. I don't blame you. I want to tell you, first of all, some veterans, you guys, some of you are veterans. I'll admit to how long I have been in the business. It's almost hard to say the words, but it is true that I do have 37 years experience in the mortgage business. Yes, don't let the Botox and the black hair color fool you. I've got some mileage here. So a lot of that was spent as an originator. And I did a good share of originations during my career. And I want you to know that I've seen times like this. I've seen this before. I don't want you to become a deer in the headlights. And that's what a lot of people do. They get concerned, they get fearful, and they don't know what to do. They don't know what to respond. I want you to use that anxiety and that fear and turn it into energy and do productive things. I'm going to tell you right now, very tactically, what would I do if I were originating loans? I'm going to go fast. So put your mental roller skates on. Here we go. I'm going to share some slides with you. So we're going to start right now. And I'm going to tell you, look at this. We're up 39 basis points. I love it. The 10 years down 8. I bet this will even get better. Watch this get better as we go. Okay. So good stuff. Well, I'll come back to this. This is going to improve. Now, success in today's market, very important, very big thing for us to have success in today's market. listen, you can take a screenshot or two, no problem. Just don't record the whole thing and post it. There's negativity out there. American Banker, hey, is it time to quit mortgage and real estate? Really? Is it time to quit mortgage and real estate? They cite the fact that if you got today's numbers, you know that year-over-year applications for purchases and refinances are down, but time to quit? Heck no. And then you get, of course, our dear friend Diana. All she puts out there is negativity. Housing's waking up to a new hangover. She thinks that if the stimulus hangover is proportional to the amount of stimulus, this one's going to be a doozy. We're seeing all kinds of people predict housing is on the way down. By the way, I don't know if you saw the John Walden piece last weekend. I mean, he did say one thing. I admit we got it wrong so far on rates. We thought, but man, have we nailed it on housing? He said that everybody got it wrong on housing except for Barry Habib. That was pretty nice of him to say. So what are we going to do? Today's market. You need to increase your income now, and I'm going to show you how to make more money right now. So I'm going to give you a plan to make more money today. Now, if you want to be in the top 15% of income earners in the United States, you need to make $100,000 a year. In the mortgage business, using some averages, that means 2 loans a month. You make 4 loans a month. That's $200,000 a year. That's 1 loan a week. How are we going to do that? We're going to show you how to do that in addition to what you're doing now. Now, anytime there's chaos, it creates opportunities. For realtors, we can gain market share right now. So the first thing I want you to do is protect your realtor relationships that you have, because everybody's trying to poach them, but solve their problems. What are their problems? Well, my client's reluctant to give up their low rate and move up. It's just a bridge too far, so they're not doing that. Waiting for rates to come down. So I want to wait for rates to come down. Hesitancy to bid over asking price. 1/3 of transactions over asking price. And then, there's a housing bubble out there. I'm hearing all this negativity. If we solve their problems, because this is what their clients are coming to with, we can make lots and lots of money and build into the future. Now, don't tell me there's no business out there, because there's 4.3 million existing home sales, 700,000 new home sales. There's 5 million real estate transactions. Some of them are cash, but still 3.7 of them, 3.7 million are going to have a mortgage. Refinances. Don't tell me there's no refinances out there, because I'll give you 1.3 million reasons to rethink that. There's going to be 1.3 million refinances. Do you need all 5 million transactions between? You need 5 million loans? You can't do 5 million loans. How many do you need? How about if you do 1 a month? How about if you do 50 a year? Just 50. You'll make $200,000 a year. So let's get into that. So first of all, what's our first tactic? Let's understand, a good coach, a good quarterback is going to take what the defense gives them. So what are we given right now? Well, here's what we're given. People have drained their savings. Personal savings rate, pre-pandemic, pre-recession, you could see it has come way down. And then we've got the credit card balances. I don't know what these X's are. Did somebody draw on the screen? Somebody's got a little drawing tool that they drew on the screen. So if you could just erase that, that would be awesome. There's a drawing tool that you have as an annotation tool. So just if you somebody's drawing stuff here. So just erase that if you can. That you have credit card balances were going up. Then the stimulus caused people to pay them down because the economy was closed, but now they have shot up here. Guys, don't draw on the screen, please.
Yeah, how's that even happening? Who's possibly doing that?
There's an annotation tool that you can draw on the screen, so you could just delete that if somebody's an admin.
I'm not sure how we can handle it. Sorry, brother.
Okay, let's just see.
Let's just keep rolling.
Okay, I got it. Clear all drawings.
There you go. Thank you.
There you go.
So 14% is the credit card rate a year ago, but today, $1 trillion in credit cards record at 22%. And then in addition to that, car payments have gone up, HELOCs have gone up. So people are paying a lot more for debt, but here's the good news. They've got equity. Average LTV is 42. Black Knight did a study. People have 231,000 in equity in their home on average, but they could pull 185,000 in cash out. So what this is telling us is people have a ton of money for cash out. So what's your rate? So don't think everybody's got a 3% rate, because only 23% of people do. A lot of people between 3 and 4. So that's about 2/3 of people between 3 and 4%. Okay. But is that what you're paying? Oh, you really have a 3% rate or 3.5% or 4%? Well, if you have no debt, yes. But so many people have debt. So use a blended rate on them. We provide a blended rate calculator. You could potentially just do this on your own. You blend their rate. They're going to be paying over 4, over 5, maybe over 6. So you're not giving up that low rate. Now, how are you going to make more money today? Think about cash out refinances for debt consolidation. Best way to do it. So they bought their home 3 years ago for $500,000, $400,000 mortgage. Their home's gone up, their mortgage amortizing. So a year and a half ago, you refinanced them. You did their loan at 3 3/4. They got 28.5 years left. Today, the rate's 6 3/4, and they got to pay $3,000 in closing costs. Doesn't pay to do it, right? Of course not, because that would cost them $588 a month. But What if they have debt? And you'd be shocked at how many of your clients do. You'll never know until you call them. And when you call them, you will find out, hey, I've got a bunch of debt, but I've got a bunch of equity. So why don't you take some of this cash that's available here? This is their LTV. It's a 56. You can take them to a 75 easy. The difference between a 56 and a 75, we'll calculate that for you.
Hey, how are you?
You wipe out their debt. Now you got an extra $1,058 a month. Found money. Now, this can be the difference for people between having to go out at night and drive Uber or staying home with your family. You know what this equates to in income? It's $2,000 a month. It's $25,000 a year in income that they'd have to make to get this, which you give them for free. You give them for free. Now, if they want to do something really amazing with it, take that found money on the new mortgage that you're doing and pay it as additional principal. So now, instead of 30 years, you have 14 years and 9 months. That's 13 years and 9 months less than they would have on their current mortgage at that 3 3/4%. So what does that mean? You're going to save them 165 payments, because instead of having 342 payments left, they'd have 177 payments left. Now, if their payment for all their credit cards and their mortgage was $5,000 a month, you're saving them that 165 times, folks. This is the greatest retirement plan in history. Why is it the greatest retirement plan in history? Because for 165 months, they will have an extra $5,000 and they didn't pay anything to do it. They didn't change anything. They're making the exact same payment they're making now. They're just doing it smarter because you are an advisor showing them how to do this. Do they have to wait 14 years and 9 months to see the benefit? No, they see it from month one. After 5 years, guaranteed they got an extra $62,000. Guaranteed. This doesn't care what Bitcoin does, what the stock market does, guaranteed. You make your payment, you got an extra $62,000. In 10 years, an extra $155,000. Guaranteed. And in 14 years and 9 months, when they no longer have any mortgage, they have an extra $282,000. You know why? Because if you would have kept your precious 3% mortgage that you would have had, you would still owe at the end of 14 years and 9 months between that and the credit cards, $282,000. Where would you rather be? Don't worry about the rate. Worry about creating wealth. This is what you need to do for your customers. You need to do it now. What's your plan of action? You did a ton of loans in the past couple of years. Call them. Call 5 clients a day. How long is that going to take you? How long is that going to? Are you doing anything better right now? You could bitch about the market. You could spend your time complaining, or you could pick up the freaking phone and call them. You call 5 clients a day. That's 25 in a week. If you only make contact with 15 of them, let's say 10 don't call you back for whatever reason. You talk to 15 people. Not everyone will do this strategy, but I bet you 1 or 2 loans per week. One loan a week is $100,000 a year. 2 loans a week, that's $200,000 a year. I'm sorry. 1 loan a week is $200,000 a year. 2 loans a week is $400,000 a year. Do the math. 1 loan a week, that's 50 loans a month. It's $200,000 a year. 2 loans a week, it's $400,000 a year. Or you can complain about the market. Now, every day people send us this. Every day we get dozens and dozens of people. Oh, I put somebody at 7%. I saved them $3,000 a month. They're loving me. This and that. You know who's doing a ton of business right now? Call centers. Because they're stealing your customers, because they don't care. They don't get in their own head. Oh, I gave them 3%. Now I'm going to call them and tell them to take 7%. They're never going to go for it. Get out of your own head and pick up the phone. These call centers are stealing your customers. You have a moral responsibility to call your customers and help them. They need your help and they don't know how to get it out of this debt. Use the same strategy to help your realtors on the purchase side. Same strategy. Okay, my customer's got a 3% rate. They don't want to move because it's 6 3/4. So that creates no inventory, no movement. But the realtor needs your help. They don't know how to do this. Show them. Okay, they bought their home 6 years ago for $500,000, $400,000 loan. They refinanced to a low rate 2 years ago for 3%. So now they owe $343. Their home's $695. But they really need the space. They had a kid. They had 2 kids. They need the room. They want the location. They want this stuff. So what do? I say, well, if I sold the home, minus the debt, minus the cost, I'd have $317,000. I'm going to use that to put down on the new home plus closing costs. Closing costs, let's say, is $12,000. I'm going to take the $305,000, use it as a down payment on my dream home of $850, so my kids have their own room. Well, that means you need a 545 mortgage. A 545 mortgage at 6 3/4% is a lot more expensive than the 3% mortgage on $400,000 that they originally took out. So they say, well, it's cost me too much. It's $2,500 a month. I don't want to give up my 3% rate because that's like a badge I have. Oh, look at how smart I am. But they do have debt. So what do? When you look at their debt, you say, hey, don't put all your money down in the new house. Put less money down. Take out a higher mortgage. Wipe out your debt And now it only costs you $280 to buy this home. I don't know if you listened to Eric Bible's podcast that he did with Tim Brahim a couple of weeks ago. The guy is crushing it. He's writing like 5, 10 purchase loans a month on this strategy. And a lot of people, the payment's going down. The payment's going down by putting them at a 7% rate because they have debt. You will be shocked at how many of your customers have debt. They love it. You know this. You're doing their mortgage app. They can't help themselves. During the mortgage app, they go and take out a car loan. They go, you tell them not to do it and they still do it. People can't help themselves. You help them. Okay, here's another problem realtors have. Well, I think rates are going to come down, and they're right. So Barry, shouldn't I just wait? Should I wait 6 months and rates will be lower, right? Maybe rates drop 1% in 6 months. Is it a good decision, bad decision? This is another. Everyone I'm showing you is actual case studies. Another one right here, Palm Beach, Florida. $1 million home. I said, maybe I should wait because if the rate today with 1 point was 6.5, wait a year, I'll pay 5.5. Well, in an 80 LTV, we know the appreciation for every market. In this market, modestly, it's only going to go up 2% in the next 6 months. It goes up 2%. That means you got to take out a higher mortgage amount, but still at the higher rate that you're paying at 6.5, comparatively, you're losing $421 a month. But 6 months from now, you could refinance. Okay, so how much did that cost me? It cost me $2,500 in payment difference, right? That's this times 6, plus the cost to refinance. I'd lose $5,500 a month. But what did you gain? You gained appreciation. You gained amortization. What's your net result? It's a $19,000 better decision to buy the home today at the higher rate. Show this to your realtor. Customers don't understand this. When you put this in front of them, show them this cost of waiting, they will be able to then say, holy shit, it's smart. You know what? The 6.5, the 6 3/4, the 7% rate, that is my friend. Because that's a wonderful thing. Thank goodness the rate's at 7%. You know why? Because I get that home at a better deal than when the rate drops to 5.5 or 5 3/4%, because then I got to pay so much more money for the home that thank goodness I can do that. And then I just refinance later. This is what you got to show people. Now, look, right now, a third of homes are bid over asking price already. We told you the housing market was going to turn, and it has. This bid over ask is happening in a third of homes, and it's going to continue and it's going to raise. Now, how do you tell somebody to pay over asking price? You show them. Here's another actual case study. Home for $459 is what the value is. We have an AVM, we see it, but also the current asking price is $459. It's competitive. You want to buy this home, you got to bid $10,000 over asking, $469 to get it. How does the customer know if that's the right thing to do? Because right now it's just an emotional decision or a guessing game. But here you come in, you're an advisor. What do you show them? You have to take a look at this, and here's what you need to know. How long will it take for this home that's worth $459 to be worth $469? How long till I break even? And then what happens in the future? Well, there's a way to do it. There's the bid over ask tool, because we know the appreciation for every single zip code. So based upon this marketplace, it's going to take you 5 months to break even. Hey, maybe it takes me 30, 60 days to close. That means 3 months after I'm in, I broke it even. That's not so bad. But what about the future? The 5-year annual forecasted appreciation is 3.6% per year. That's not too far off the 63-year average of 3.5% per year. So it's very much in line. And that means you're going to make $90,000 on this home in 5 years. Hey, maybe I should spend $10,000 over asking price. Solve your realtors' problems. Fix their issues. What's another issue? Oh, I don't know. I don't think the housing market's strong. Everybody's tough. Don't bet against housing. In the last 81 years, home values have gone up 73, down 7, but 2 of them were only like 1%. And then everybody worries about this 5-year period with the housing bubble. That's what they ignore all this. They worry about this. And they say, Barry, you know what? Look at the last 3 years. By the way, we're the only ones that called it, that said in 2022, everybody was expecting a crash. We said no. We said 5.5% appreciation, came in at 6% appreciation, pretty close to a bullseye. So there was no housing crash in 2022. In 2023, values are already up year to date. So when we take a look at this and we say, okay, they went up a lot here. They went up compounded basis 40% in 3 years. Does that mean there's going to be a crash coming? Well, it's happened before. During this period of time, home values went up 118%. If you waited for them to come down, you had to wait 43 years for them to drop 1%. Then they went up another 14 years in a row. So keep waiting. And in between that, they went up 93% during that time for another 6-year period. Okay. Yes, it dropped 1% over a 2-year period, but then they went up. Everybody worries about this. Everybody worries and is concerned about this, but things were different. Look at inventory, 4 million units back then, 1 million units today. Our population's increased by 30 million people, 30 million more people, 3 million fewer homes, plus the demographics. Builders built too much, household formations too little. Today, more household formations, builders can't keep up, plus lending standards. Here, Fog up a mirror, you're approved. Do you have a pulse? Here's a loan. You know, no income, no asset, no job, no down payment, 580 FICO score. You don't have anything like that today. Different environment. Look, team, the tables have already turned. January was the transition month. Yes, it is true from June of 22 to the end of 22. Remember, first half of 2022, January to June of 22, prices went up 9% nationally. From July to December, they did decline by 3%, but it's already turned. January is the transition. Look what's happened February, March, April, by all the metrics, Case-Shiller, FHFA, CoreLogic, Black Knight, Zillow. Now, with the latest data we got from Black Knight, we are already at all-time highs in housing. The latest data from FHFA, already at all-time highs in housing. And we will continue with all these metrics as they come in. You will see all-time highs in housing. So there was no bubble. There isn't a bubble. And now is the time to buy. Prices have bottomed out. What happened the last time prices bottomed out? In 2012, in the year that followed, prices went up 8% the next year. But that was with 2.4 million units in inventory. Today there's 1 million units in inventory. Now, look, I don't know if you see this here, but people get confused. This just came out from Forbes. Home prices are now just beginning to slowly decline. I just showed you they're not declining. I just showed you, right? They're going up. They're not declining, everybody. They're not declining. They're going up. So how do they screw this up? How does Forbes screw it up? Why does CNBC and so many people screw it? I see housing analysts. I see housing market. How do they screw it up? You know why? They look at median home price. Median home price is not appreciation. They never went to math class. Let's understand it so we all can explain it to our customers. Let's take a simple example. Imagine there are 5 homes, lowest price to highest price. The middle one is the median. Now, if there's, like there was in 2022, 6% appreciation, let's assume this applied to all these 5 homes. So these 5 homes all went up in value. You can see them all went up 6%. So prices went up. But now, if in 2023, only 3 sell and they happen to be lower priced homes. So if these 3 homes sell, the median of home price sales is this. That's a decline of 12% in median home price. But appreciation for this home was up 6%. So do not pay attention to median. It is appreciation, and appreciation's going up. That's what people make money on. Housing stays strong through recessions. Are we headed for a recession? Yes. You can argue we had a recession in 2022, 2 negative quarters of GDP, but they changed the goalposts. The government decided, we're not going to do that anymore. We had 2 negative quarters just now of gross domestic income. We're not in a recession. Look, eventually they're going to call this thing a recession. What happens during recessions? During the last 9 recessions, home values have gone up. One time it didn't. I showed you there was too many homes built, too much inventory during this period of time. And here it is, 4 million versus 1 million. But that doesn't even tell the whole story today. Today we got 1 million units, but the market's so hot that you've got about 45% of them under contract. That means there's 614,000 active listings. That is less than half the pre-pandemic levels there were. There's no inventory. You already know this. That's why you can't have home prices drop. Last year, we said 5.5% appreciation. It was at 6%. Now, if you read the piece in John Malden, he was very kind to me. If you read it, he goes out to 2 million readers. It's a great read. You should do it. Here's what he said in his piece and thoughts from the front line. He said, housing is a lot stronger than anybody would have thought it would be. Well, other than Barry Habib. This was just in last Saturday's thoughts from the front line. So what's our forecast for this year? Lower inflation, recession-like slowdown, incomes are increasing. That's going to help affordability. You don't use all your money from your income to pay for your home monthly mortgage payment. So affordability is a lot closer than you think it was. If we had more time, I'd explain it to you why. Very tight inventory. Rents are still expensive and rising. Our forecast is 5.8% appreciation this year. I would bank on that and see you're going to have that. Look, you need to be in real estate. Let me explain why. Kiplinger's did a study. If you want to be in the top 1% of net worth in the United States, you need $10.8 million. Top 2%, you need $2.5 million. Top 5%, you need $1 million. You want to be in the top tier, you need $800,000. You want to be in the top half, you need $500,000. So here's what they also found in the study. 2/3 of all net worth came from home equity. You can't get rich being a renter. Teach your customer this. Stop playing with renting. Own real estate. The average homeowner net worth is 40x, 40 times that of a renter. 40, not 4. 40 times the net worth. Show your customer this. Get him in a home. What would I do with the realtor right now? Hey, before you go out on a listing appointment, let me pull an AVM. Takes 2 seconds for me to do it. Here's what the whole neighborhood's values are. Here's your subject property. Here's what it should come in at. Maybe you could bring them down to earth. Let me help you. Here's an interactive map with all the comps. I'll pull the comps up for you so you don't have to spend an hour pulling comps. And then I'll give you a market analysis with trends in the neighborhood so you can have a professional report. Let me be an asset to you and help you so you can help me. Real estate report card. Guys, if you're not using this, what the heck are you thinking? What do you think your customer wants to talk to you about? You think they want to be friends? They have enough friends at their age. You know what? You think they want to talk about qualifying? No. They want to know what's historical appreciation, what's the future hold, how much money am I going to make on this house, what is the household formations and completion, so I know the inventory levels, I want to know the demographics, what's the rental situation, what's the job market like, what's the incomes. This is what they want to know. Everything on one page. Say thank you to your realtor by co-branding it with them and giving it to them. And then in the great book, The Art of War by Sun Tzu, what does he say? He say every battle is won or lost before it's ever fought. Are you winning the battle before it's fought? Are you going in there and saying, here's a bagel, please send me a loan? Or are you saying, hey, here's what I'm doing with top performing realtors. I'm helping them gain more listings at point of sale, make more sales with customers because I'm showing them the benefit of home ownership with these types of things. And look, if you're part of MBS Highway, great. If you're not, really think about it and watch the daily update every day. Please watch the daily update. We give you stuff to say every day. In that 7 or 8 minutes, we help you with that. How much does it cost? It's $200 a month. I know money's tight, but we're going to give you an $80 discount. It's $119 a month or $11.99 a year. Just email Diana at MBS Highway if you want to sign up. Guys, just the debt consolidation tool alone will make you an extra $200,000 a year. It's sure worth $119 to do that. Try it. It will pay off for you. Now, I started off with this, and I want to end with this. American Banker. Is it time to quit mortgage and real estate? Heck no. Is housing going to be in a hangover? Heck no. There's one thing I didn't tell you about this. These articles, they were both written in 2014. I told you I've been in the business for a long time. This market resembles 2014 a lot. The people that got out in 2014, the people that didn't invest in themselves in 2014, the people that weren't part of Carl's coaching program, the people that got out of the business or that didn't invest in themselves, they missed the greatest 8-year run in the history of the mortgage and real estate industry.
True.
I don't know what the next 8 years have, but I could promise you this. Times are going to get better. Rates are going to get better. Real estate market's going to be hot. People are going to leave the industry and give you greater market share if you take action. Use the fear. Turn it into positivity. Look, if you want to stay in touch with me, I am Barry Habib on Instagram. And this is something that I put a lot of reels out there. I don't do them for me. I don't do loans. I do them for you. Take the reels, copy them, use them. Follow me on Instagram. You will see a lot of the things we talked about. You'll be able to use it. And by the way, we put a ton of scripts out there in MBS Highway 2. Use the scripts. Use the presentations. Everything we put that you saw me do, we show you in a presentation format with PowerPoint slides so you can present it to your realtors, present it to your customers. This is what you need to do. You want to get market share? Take action. Get up and take action. This is the things you have to do. We have a couple of minutes here. I'm going to show you one thing that you might want to consider. It's called Agent Intel Connect. And look, most loan officers are in a position where what they will do is they'll talk to any realtor. But that could be a waste of time. What if they send all their business to their husband or their wife? What if they don't do any purchase business? What if they don't do any business at all and they just want to pick your brain? Text the realtor's name. We use AI. We'll send you back their info. And then what we'll do is we'll say, hey, in the last 12 months, what did they do? 16 purchase transactions, 7 listings. Okay, 16 purchases. Great. What type of business do they do? We tell you. Who'd they send it to? Here's who they sent it to. Here's the company they sent it to. Great. It's not all their spouse. Good. I want to break in. What do I do? Well, we'll show you their active listings. We'll show you their recent sales. And then you click one of them, and then we'll create marketing pieces for you to review. And then it's on that listing, so it engages them. They care about it. These beautiful pieces will go out with a cover letter. We know if you're doing business with them. We write the cover letter for you. Want to introduce myself, show you how we're helping realtors. Attached to these pieces, take a look at them. And then we show you how to get in touch with them. Here's their contact. Here's where they do their business. Here's your points of commonality. Here's what you can congratulate them on. And here's where you're going to find them. Here's their open houses. Guys, this is a home run for you. Please, please take a look at the stuff that we put out there to help you. Man, we came in with a minute to spare, guys. So that was pretty quick. You have another question?
I'm impressed, Barry. That has to be the most slides in the least amount of time with the most information. No fluff, nothing but power. Man, out of the park home run, buddy. Good stuff.
Good stuff. Yeah.
I'm sitting here taking notes. So
I had 2 cups of coffee this morning. So
only 2? Come on.
Big round of applause for Barry Habib, everybody. That was epic, Barry. That was awesome, my friend. Awesome stuff. We'll be sure to get the links into the chat for everybody too, to mbshighway.com, so people can click there if they're not already a member. I mean, pretty much you've sewn up the entire market, Barry, and as it should be, my friend, because great stuff you've got, man.
And mortgage-backed securities are up over 40 basis points right now, so that's a good thing for us.
Yeah, another cheer. You know, guys, we're at the top of the hour. I don't know that we have a lot of time to engage with y'all, but I would just say engage with Diana. It was Diana at MBS Highway, Barry. Is that what it is?
Diana at MBS Highway team.
Diana at MBS Highway. Engage with them there. Also, guys, today is Wednesday with the Daily Success Plan at Mortgage Marketing Animals. Ironically, it's what Barry was talking about, is reaching out to our past client database. So today we're going to be making calls to our past client database, guys. And now you've got some stuff you can talk about, some extra stuff if you want. So make sure you do that today. Don't forget, we call 2 letters of the alphabet every Wednesday. If you do that, you want to be getting through your entire database in 90 days with a phone call. If you want to learn more about us as well, go to dailysuccessplan.com. That's dailysuccessplan.com. We'll throw the link into the chat there. You can go through the Daily Success Plan in detail, all for free. Barry, man, my brother, my good friend, my best pal ever. Man, so glad you showed up, bro. Thank you for being here. You're always just a beacon of light in all this stuff. So really appreciate you, my friend.
Thanks, guys. I'm just looking at the very kind comments. God bless you, and thank you, all of you. By the way, it's Dan at MBS Highway. Thank you for Sarah, for putting that in there. Thank you. Folks, please do not get discouraged. Things are going to get better. I promise you. I know it. You can get worried sometimes. Turn that fear into action, okay? Just take action. Carl, Frank, they give you so much great advice as to what to do to make your calls. Use some of these tools. Take action. This is a market. I'm seeing people get great results. You can too. Love you guys. I'm telling you that this. You can turn this into gaining market share and turn this into your advantage. Things are going to get better. You'll see.
Awesome stuff. Awesome stuff. Well, guys, look, let's get the heck on out of here and get this show on the road, my friends. Let's make some money. Let's make some calls. Call a past client database. Get them refis in. You can save a ton of money. Let's go. You guys have a fantastic day. Thanks for showing up today at the Mortgage Marketing Animals Loan Officer Breakfast Club. Be here every Monday through Thursday, 8:30 a.m. to 9 a.m. Eastern Time. Absolutely free. You'll love it. You'll absolutely love it. You guys have a great day. We'll catch up with you later. See you mañana. Adios, my friends.